No, I agree with you 100%, man. And like I said, we've connected on this in the past, and I'm gonna tell you one of the things that pulled me away from that connection is just the thing that you're talking about right now. So since we've last talked, that's one of the things I've been real hot and heavy on, like building my own brand. And so that's kind of like where I got into government and state contract and things of that nature. And what I would tell you is that this whole 401k thing that you're talking, I mean, he is 100% correct. It even got to the point to where I had to, because again, I was my own company. So I had to, hire an accountant, and we had to set up payroll and all that other great stuff. And I said, hey, what about 401k? And so that's when I connected with a company called Guideline. And so I created my own 401k. I am my own employee, so I invest in my own, I invest in my 401k, and I actually match my so he's 100% correct. And it's just understanding the legalities that go around creating your own business. So keep that same mindset when it comes down to creating that long-term wealth for not just you, but your children, your children's children. Just in everything I'm doing right now, just to caveat off what you're saying, it has my, like, literally I'm doing it for my grandson. And so, and any other grandchildren that's to come with along with him, right? It's all for them, because at the end of the day, I want to create such a legacy to where they don't have to go through the struggles that I went through. They don't have to go to basic training. They don't have to do 20 more years in the army. So I love where you're going with the whole business concept. And then there's a whole nother conversation when it comes down to business that we can talk when it comes down to taxes. Taxes is, again, another vehicle that you cannot ignore when it comes down to investing in things of that nature. That is something to consider as well. And I know he talks about it in his courses. Again, man, this is good. This is like, we literally went from elementary school all the way to high school, literally about to go into college just that fast. And I don't think we really realize that, because you're spot on. 401k, and I would tell you, just like I was talking about E-Trade previously, I looked at the stock market, and you're right. I started looking at CNBC and the daily ticker and all that other. I said, man, this is a full-time job. I don't have time to do that. I got a full-time job I got to go to in the army. I got to come home. I got to do with the wife and the kids and all that stuff. I don't have time for all this. So you're right. I went to the whole mutual fund thing. And as a soldier, one of the things I realized is that TSP was the best thing smoking. So I stopped dealing with mutual funds altogether and totally invested myself into TSP. So that's the military's version of quote unquote 401k. If a person can afford to max out, and maybe you got to kind of help me out with this one, because you're way more versed in this conversation than I am. What is your take on those individuals who want to max out 401k? Not just the company match, but I'm talking about the IRS match. I think it just went up to 25, so $20,500 a year. All of that. What is your take on that? Do you advise it?
Well, here's my take on that. My take on that is there's nothing wrong with maxing that out. However, if you're carrying debt, we need to take care of the debt before you start really maxing out your retirement account. And here's why I say that.
Yeah.
Let's say you got a credit card. What's the average interest rate on the credit card? If you look at the average interest rate on the credit card, you're probably looking at 20 to 22%. I bet that most people got 20 to 22%. You might have 18%, but I mean, you got 18 to 22% that you're carrying on your credit card. You got to ask yourself, what investment that I can invest my money in that's going to give me a guaranteed return of 20 to 22%? There probably isn't any. So you got to think about, by paying off your credit card, you are actually earning 22% by paying it off, because you don't have to pay the 22% if you pay it off. So when we're looking at maxing out retirement accounts, there's nothing wrong with that. But if you've got debt at 20, 22%, before you start maxing out your retirement account, let's go ahead and get this guaranteed 22% over here in the form of debt. Let's pay that off. Once that debt is gone, now I can start maximizing my 401k, my retirement account, my TSP. I can start maximizing those types of things because the numbers just make sense. Now, there are some things that you may not ever want to pay off. I'm going to say this, and some people may disagree. You might not ever want to pay off your house if you got a 2.5%, 3% rate on it. Why? Because you might be able to invest and put your money where it's making 15%. The house is 3%. You might want to just invest, right? And so one of the things that we teach is that the last thing that you want to pay off is your home. At some point, maybe you do want to pay off your home, but the last thing that you want to pay off is your home. In fact, I would much rather you take the money, invest the money, and then when you have enough money to pay off the home, just pay it off. Because here's what a lot of people don't think about. Let's say that you start doubling up your payments on your home and you really start paying that home down, and then you lose your job. Now you got this money tied up into your home called equity, but you can't pay the mortgage on it because you just lost your job. So all that extra money that you put into equity, if you foreclose on that home, you lose it. So I'd much rather you take that extra money that you were been taught to apply to your mortgage, put that over here in an investment. That way, if you lose your job and they come foreclose the home, at least you still got your investment over here. But if you build your investment up and you have enough money in your investment that you still want to pay off your house, well, at that point, you can pull the money out of the investment, pay off the house, and now it's yours. But if you're taking, years to double up on your payments, you're taking a risk, an unnecessary risk, because if something should ever happen to you, yes, you paid down the house very quickly. Yes, you got equity in your home. But I'm here to tell you, because I've been here, if you lose your job, you can't get a line of credit from your home.
True.
Unless you already got it set up, unless you already got a home equity line of credit set up and you got checks sitting off to the side. If you lose your job and think, well, I got all this equity, I'm just going to pull from the equity out of my home, the bank is going to see that you don't have a job and they're not loaning you any money.
Okay.
So, we got to be careful and we got to understand and think about money in a practical way. I want you to max out your retirement, but there's a point in time, there's a right time for you to do that. And hopefully that makes sense.
Yeah. Nope, that makes perfect sense, man. I love it. See, this is why, I would tell you, I am not a financial guru. I'm not a financial expert. I'm a coach. That's what I do, right? When it comes down to it, I'm going to ask the question and drop it in your. Now, I don't want to ask you anything where you overexert yourself. I don't want you to put yourself out like that. But that was golden. Whoever, if anybody heard that and they didn't write it down, I suggest they rewind it, listen to it again, because that was golden. I know several people right now that double and triple up on their house payment because they want to pay it off in 10 years or whatever the case may be. But that bit of information that was pure gold. And so, man, I greatly appreciate that. And so here's some of the other things that, people tend to talk about within the realm of finance as well, because 401k is huge, and I greatly appreciate that response. And you're right. You should not be maxing out on that if you have credit card debt. The other side of that coin, if you're like me and you have no dependents and you're getting hammered by taxes, that's why I do it. Because man, listen, I'm telling you, it's crucial. I'll be bleeding every month from taxes, man. So that's why I do it, because I want my taxable income to be lesser. And that's the main reason why I get into it. And so, for that person out there that looks like me, that, who don't have, any those dependents, whatever the case may be, and they just getting railroaded with taxes, that is a way to reduce your taxable income. On the other hand, and I'm glad you brought real estate into it, because real estate can be an investment if you think in that nature. That was my thing when I was younger. I used to tell people when I was younger, I hated reading. I would only read things that benefited me. So I read books on real estate from Dummies and Carlton Sheets. I don't know if you remember that guy.
Yep.
So, I'm up late at night, man, and I see Carlton on TV, and I'm like, I don't know this cat, but what he is saying is making sense, and I'm interested. So I bought his course, and I went through it. So from the perspective of investing. Now let's make sure, and before I ask this question, let's keep this in mind. He already gave you a great starting point. You eliminate debt. Start with a savings of $1,000, $3,000, and if you've ever took a part of um, Dave Ramsey's Financial Peace University, that's one of the things that he recommends. So that should be congruent with what you've heard from Dave Ramsey as well. But eliminate debt, build up your nest egg as far as a savings account, the quick cash for adversity, and then there's another piece where you need to build up. Most financial planners recommend having 3 to 6 months bring home pay for that time frame, just in case you lose your job, like Jim mentioned previously. But what about that person that have a passion for real estate and they want to just dive into the real estate market? How does this framework help them to get into the real estate market? And again, if that's too far, if you don't want to go that far, by all means,
Oh no,
let me know that.
no, we're good on that. I have real
Okay.
estate myself. I have rental property, and so you brought up taxes, and you're absolutely correct. People have to figure out how to lower their taxes. Everybody that's wealthy, they have tax strategies. It's there's when we think about the president, the previous president, and everybody talking about he didn't pay any taxes. Well, guess what? All wealthy people do that. There was nothing unique about
Yeah.
Donald Trump and him not paying taxes. Amazon didn't pay taxes for years. So there's many companies and many individuals out there who they realize that you have to understand taxes in order for you to create wealth, because if you don't, Uncle Sam's taking 40-50% of your wealth in taxes. I mean, if you think about your income tax is probably 18, depending on how much money you make, 18 to 20, 22%. Then when you get the money and you go out and you buy some clothes, you got to pay taxes on anything that you buy in the store. You got property taxes. You got, all types of taxes. And so when you start adding up all the taxes that you pay, you're probably paying half of your amount of your money into taxes. So
Yeah.
if you get into real estate or into a business, you start to learn that there are tax advantages for you in those areas. So I once heard Grant Cardone talk about, I rent where I live and I buy where I rent. And so what he meant is that there was an advantage for me to buy a home that I can rent out to somebody. But there was no advantage for me to buy a home myself to quote unquote live in. Now, everybody got a different opinion on that. But the one thing that he said that made a whole lot of sense to me is that he has a business. He has the business buy the house, and then the business rents the house to him. Now, let me explain to you why that is such a smart move. If I'm living in a house that doesn't have my name attached to it, but my business owns it, so I pay rent to my business.
Mm-hmm.
When the water heater breaks, the business has to pay to fix the water heater, and that becomes a tax deduction for the business. If I own the house, there is no tax deduction. I just have to buy a water heater, right? So all of my expenses for the home flow through the business, and it becomes a tax deduction, saving me money on taxes. And so there's nothing necessarily wrong with owning a home, but when you start listening to the wealthy, there are structures that they put in place that make it more advantaged for them. So you might see the wealthy driving a car and you think that that's their car. That's the business's car. That's the
Business car, yeah.
They tell me, and I haven't gotten to this point, but they tell me that you don't want to own anything, but you want to control everything. And so when the business owns the house, when the business owns the cars, but you control what house you live in, you control what car you drive, but the business owns everything, it becomes a tax deduction for everything that you do. Real estate and businesses are the two things that give you the best bang for your dollar. And so the nice thing about real estate is you get to leverage money. So what do I mean by that? This is the difference between real estate and stocks. You can take $20,000 and buy $200,000 home. You put 10% down, which is $20,000, but you've got $200,000 home. Now that $200,000 home 5 years from now appreciates to $250,000, right? And so you're leveraging your money with real estate. With stocks, you can't quite do that with stocks. If I want $250,000 worth of stock, I got to go buy it, right? With real estate, you're able to take your money and you're able to leverage it. So not only are you getting money on the capital gain of the real estate itself, but if you're renting it out, you also are making money on the rental. So real estate is a beautiful, beautiful investment, the right type of real estate. And right now, I mean, it's a perfect time to be in real estate right now because of just the high prices of real estate as it is and the high rents that's going on. But I do believe that real estate has to be a component of your investment. And here's what we call that. We call that diversification.
That's right.
Like I can't just be invested in my 401k and all I got is my 401k. Because right now, if I have to be honest, everybody's 401k is down right now. Right? Because of everything that's happening with Russia and Ukraine, and the stock market is down. So, but housing is up. The housing market is booming right now. And so what you've got to have is you've got to learn to diversify. Maybe you got some stocks, maybe you've got some real estate, and maybe you've got a business. You've got to learn to diversify when it comes to creating that wealth. And so I think a lot of people, Coach, I think they think that, this call was going to be about, buy this stock and sell this stock, but that's not really what wealth is about. Wealth is a component of a multiple amount of different things. And I'm glad that you talked about taxes, because taxes is probably number 2 on most wealthy people's list on what they need to attack and be able to figure out. So they know when they buy items, whether they can write that off or not.
Absolutely.
I buy $1,000 iPhone. Most people got a lot of people got an iPhone, but because I bought my iPhone through my business was able to write off $1,000 on the iPhone. Whereas my next door neighbor doesn't have a business, but they got an iPhone too, but there's no tax deductions on their iPhone. So those are things that people really need to learn.
Absolutely, man. And I'm telling you, I am bubbling up inside with this conversation, because I'm gonna tell you, I got like 3 more questions I really want to ask you. But man, listen, we can be doing this for the next hour after this hour is over with, because this is all great information. And so what I'm not going to do is bombard you with, and here's the other piece to it as well. You're right. I believe somebody thought that I'm gonna get some investing tips. I would not let you go down that rabbit hole, sir. I'm not going to, because what they ain't going to do is come back and say, well, June and Dwayne said to do this. And they said to do that, and it didn't work for me. Listen, man, this is amazing. I mean, I can't thank you enough just for the bit of information you gave us. Because I'm telling you, if you can literally take what June is saying right now and put it into action, you can literally start making changes in your life. All you got to do is just practically put it to action. And if you don't know, you want to connect with somebody who does know. And I think what we understand right now, that this young man knows exactly what he's talking about. I mean, he's been doing it for 20 or more years, and he's done it the hard way. But in the ebbs and flow of doing that, he learned some very valuable lessons. And I just have to appreciate the story that you told about that young man, because you not only helped him to view himself through a different lens, and I think that's really what we're talking about. We need to stop viewing life through the lens of limitations and realize that there were never any limitations put on you from the beginning. You accepted those limitations. So, man, let me stop talking, man, because I'm telling you, I'm bubbling up, man. I'm loving it. June, tell them how they can find you, brother, in the digital space.
Well, listen, you can find me at june@junecollier.com. That's my email address. It's june@junecollier.com if you want to contact me. My website is junecollier.com. And of course, you can find me on Facebook at June Collier. So, I mean, those are all the different places that you can actually find me. If you've got questions, or, you got something that you're dealing with and you want to just kind of bounce the idea off of me, I definitely would be more than happy to help you out.
Absolutely, absolutely. And again, you did mention some courses that you're doing, that you're teaching. Are you teaching any courses coming up in the near future?
Yeah, right now I'm actually teaching a course right now called Stock Investing for Complete Beginners. I do that about every 6 weeks, and we're about week number 3 right now. So in a couple of weeks we'll have that class start all over again. I also do options trading for complete beginners. Options is a little bit more advanced type of trading, so we do that as well. But the one that I recommend most people for is the stock investing, and we cover. If you don't know anything about stocks, that's the class to be in, because I take you from ground floor and we build you up. It's a 6-week course. We meet once a week, and I build you up over that time period.
Beautiful, beautiful. And they can find all this information on your website, correct?
Right. If you go to junecollier.com, you'll be able to find all of that there.
That's what I'm talking about. So as always, because I mean, you've hit us with some heavy thing. I mean, he's been pitching like shutouts all day long. But I need one final thought from you, June. What is something heavy that you want to leave us with, brother?
I don't know if it's heavy or not, but here's the thing that I think that is the most important thing. You are your best investment. You. And when I talk about you, that's your mentality, your health, your skill set, your ability to create wealth, because God gives us the ability to create wealth. He says that in Deuteronomy, I give you the ability to create wealth. And so you have to believe in you, and you have to look at the skills that you have and the gifts that God has given you and use those gifts. And you will be able to stand before kings and queens and be able to offer your services and stand head and shoulders above everyone else. And even if that means that you're standing head and shoulders above everyone else at the workplace. See, everybody's vision and everybody's path is different. But what you've got to do is you've got to continuously invest in yourself. And when you invest in yourself, all the other things will align up. The connections with different people will align up. But if you just go to work and come home and sit on the couch and watch TV, go to work, come home, sit on the couch and watch TV, you're going to attract other people that go to work, come home, sit on the couch and watch TV. If you want more in life, then you got to step it up. You got to invest in you. And once you start investing in you, everything else will start lining up. That's my advice for you here today.
I love it, man. I love it. Wise word from Mr. June Collier. Sir, as always, beyond expectations, man. Just amazing. And I thank you for that. Thank you for just being you, because this is who I've always known you to be. You've never disappointed from day one, and you surely didn't disappoint today. And on behalf of the Empowering Perspective community, man, I just want to thank you. Appreciate all that you're doing. Keep doing what you're doing. And I'm gonna set the conditions right now, because I think you and I, we need to do some more talking in the future. Because
we do.
Like I got some more questions, man.
We do.
Yeah, we definitely do this. But look here, man, appreciate you. Appreciate all you do. Go follow him in the digital space. I'm telling you, you will learn a great deal. Mr. Collier, keep being great. And again, on behalf of the community, thank you for what you do.
Well, thank you for having me.